Good morning, everybody. Welcome back to the channel. We are back with another market open. It is January 15th, 9 a.m. Now, the market is not open today, but I was like, you know what? We still have a ton of news we can run through, a bunch of things that we can talk about. And honestly, shout out to, I think, Tony on Twitter. He said, Amit, tell me you're going live this morning, even if there's no market actually opening. I need a jolt of energy to start the week off. And, originally I was like, maybe I shouldn't go live. It's just whatever, it's like the market's not open. And then I was like, well, what if I did? What if we did go live and we talked about a bunch of different things that's going on in the news, even if it's not literally pertaining to the market being open, like literally right now, right? So from that perspective, I was like, you know what? Why don't we go open? Why don't we talk about some different news? This is going to be, probably maybe 45 minutes, maybe even 30 minutes, but maybe we get to that 45-minute mark and just get through a bunch of different updates that we have going on in regards to the broader equity markets. Obviously, today, markets are closed for Martin Luther King Day. It is incredibly cold in the state of New Jersey, and I'm sure that if it's cold in the state of New Jersey, it's cold in other parts of the world. Like today, I went to the gym this morning, and today was very, it was cold. Like when you go outside, it was like you run to your car immediately and get into that car, turn the heat up as high as you can, because it was cold today. So it is cold out there. I'm sure everyone wants to be snuggled in their blankets right now. Also, I think most people, let me know in the chat if you have work today, but I think a lot of people don't have work. I could be wrong, but I know like public school employees, any public employee, at least in the United States, does not have work today. But obviously, if you're international, you probably do have work. It's a regular Monday morning. But for those in the United States, a lot of places are indeed closed today, and people get to take a day off from work. My mom and my sister are both in the education industry, so they both don't have to go to work today, which is great for them. All right, so let's see who we got here today. Mark LeBlanc, Gino, Kevin, Mikhail, Victor, Jaquez, Richard, Jared, Katie, Juan, Jared, Ray, Greatness, Meta Mike, Victor Hernandez in Spain. Awesome, I love it. Monty, Greatness says, I went to work and they sent me home and I'm the boss. Dude, I did that once. One time I was working for this client that I had, and it was like pouring rain. Like it was just like some of the worst rain you've ever seen. And I drive to work, and mind you, work is 60 minutes away. So I drive and I get there and there's no work. And I text them and I'm like, dude, like what's going on? And they're like, oh, we posted on Instagram that the office was closed today. And I was like, did you really expect me to check Instagram in the morning to make sure we got an update that the office was closed? Like, you couldn't have sent a text that, hey, no work today. It's raining too hard. It's like, nope. So I drove all the way to upstate New Jersey for work because I was a dedicated, employee. I was like, it's raining cats and dogs, but I'm still going to make it to work. Next thing you know, the Instagram says there's no work today. I'm like, all right, well, I guess Instagram is the way we communicate now. Cameron, Katie, Artishir, what's up? Dr. Gino, Big Billy, Damien, Dan, morning from Bucharest, Netherlands. Feels like negative 21 in Nebraska. Dude, it is cold today. It is very, very, very cold today. Now, one quick announcement. I'm going to be in California tomorrow, so I will not be doing the market open or the market close because I will be out there in California. I think you guys will really like what we're doing in California. You will know about that soon. So I'll be back on Wednesday. I'm probably not going to be able to do the market open on Wednesday either because the flight comes in early morning, I think. Yeah, early morning. Yeah, we'll do the market close on Wednesday, but not the market open. So we got 2 days of no market open, which is another reason I was like, you know what? I should go live today because if we're not going to go live for the next 2 days, which is unheard of in market open land, then let's just go live today and see what we can talk about. Okay, so let's talk about some stuff that we've got going on in the broader equity markets. There is Davos Summit that is starting this week. Alex Karp will be speaking there, and we'll probably get some images or video footage from him either today or tomorrow. So that's going to be happening this whole week. This is the World Economic Forum. I know a lot of people have a lot of thoughts about the WEF, but they do host the summit every year, and Karp is usually there. He's usually interviewed by Andrew Ross Sorkin from CNBC. So we're probably going to get some updates from that. And then I found out from a Swedish media publication today that Karp was going because they didn't make it public anywhere else. I want to talk about Palantir NHS updates as well a little bit later in the show. If you guys follow me on Twitter, I posted a link of the results that Palantir has had from the NHS updates or from what they've been doing in the NHS. The entire video today on Daily Palantir is going to focus on that, but I did want to show some preliminary results because it was pretty fantastic. Some of the things that we found. And so I want to talk about that and discuss that for a little bit. And then I want to talk about money market funds as well, and a lot of macro news that we've got going on, because the macro news is actually pretty interesting to see a bunch of different stuff that's going on in the world. Meta Mike says, we'll miss you, bro. Have fun in Cali. I appreciate Meta Mike. I'm literally there for 24 hours. I'm there. I drive somewhere. I do something. I come back. I get on a flight, and I'm back in Jersey. So it's a 24-hour trip that we're doing. Davis, good morning. Amir, good morning. Amir's article blew up on Seeking Alpha for those that have not read it. Oh, we can probably talk about the PayPal article as well. We can talk about that. So Amir had this article on PayPal, and I think it's like the #1 trending article or something. It's like a phenomenal article. And we had a really good interview about it. I'm going to put it in the chat for those that want to read it. If you are interested in PayPal, you can definitely check it out. Okay, so I think let's do macro. Let's do macro first, and then we'll move on to a bunch of other stuff. So I have a ton of different things I want to run through the macro. Let's start it off first, and then we'll keep going from there. So let me pull this up. Okay, cool. Let's do macro. So first thing I want to talk about when it comes to macro is money market funds. This is the data that came out last night, and I published it on X. And here is the money market fund data that we've got. So total money market fund assets increased by 9.9 billion. Let's call it 10 billion bucks to 5.98 trillion for the week ended Wednesday, January 10th, which was about 5 days ago. So this is really interesting because money market funds basically got their third consecutive week of increases. It was 11 billion, then 15 billion. Now we got 10 billion after 2 consecutive weeks of decreases in December. So in December, we lost about 11 billion. Then we lost about 15 billion. And then we got all of that back plus an additional 10 billion going into the third week of, or basically the second week of January. Why is this happening? I think that the market's in a very peculiar. Why can't I say this word right? That's what happens when the market's closed. I don't know how to say these words. It's in a very interesting position, peculiar position, because what's happening right now is you got the S&P basically at all-time highs, but you've got various sectors kind of shitting the bed, whether it's the Bitcoin stocks, whether it's some of these fintech plays, obviously PayPal, SoFi kind of been stagnated. And then you've got Mag 7 doing phenomenal, right? Mag 7, Meta, NVIDIA, and Microsoft hit all-time highs. And Google finally broke out of the 138 range. Tesla's been in the gutter. We'll talk about Tesla in a little bit. And then Apple's been at 185. It's been down about 4 or 5%, nothing that crazy. So, money market funds increasing it's very interesting because it means that $6 trillion on the sidelines is basically saying, hey, we don't want to really dip our toes and play with the big boys yet because it's just not that exciting right now to put some money into these markets. And if the market is not that excited to put, $6 trillion into the markets yet, it's likely, probabilistically, that the market is expecting there's going to be a downturn. I mean, when you got $6 trillion on the side, either you're going to miss the run up like you missed in 2023, which some people might, or you're expecting there to be a way better entry to get into the S&P 500 than all-time highs, a way better entry to get into NVIDIA than all-time highs. My bet at 310 is probably way better than buying it at 370. The question becomes, is the money, the $6 trillion that's on the sidelines, actually going to be able to get that opportunity or not? I don't know. And a lot of this inflation data is ultimately going to reveal if we get this opportunity or not. In my opinion, so far, no, because the inflation data is phenomenal. Like that CPI data sucked, but that PPI data was amazing. And so I think that PPI balanced out what is really an anomaly of CPI. It's going to be harder to get disinflation, but what we're seeing across the world is a lot more disinflation. And so as a result of that, I think it will be harder for people on the sidelines to get those juicy entry prices they want. But if inflation, doesn't tank the bed like we want it to do in terms of falling off a cliff, it's going to be stickier, and that means the Fed's going to have to raise rates later. Paul, thank you for being here. The market is closed today, bot 101, but I'm not doing a market open for the next 2 days, and decided that we should still do a market open today. And also, there's plenty of stuff to talk about, even if the market is not open yet. Okay, a couple of other points of macro news, and then we'll move on to some other juicier stuff. This is on macrodarts.com. Launched this website last week. Can't even believe I launched it last week, but we launched it last week. Thank you to the 1,400 people that have followed the account on Twitter. Twitter account is in the description right now. 3 things I wanted to talk about. Number 1, Germany wholesale prices year over year have decreased by 2.6% year over year, easing from a 3.6 fall in November. This is the 9th consecutive decline of Germany wholesale prices. Overall, that is, it can be interpreted as bearish or bullish. The bullish argument is that their PMI might come down a little bit, but their overall exports will increase, which is going to kind of balance out the contracting nature of that PMI, which is, a good thing in general for Germany exports. So we're seeing Germany play a much better role in terms of the prices that it takes to actually ship out the things that they do in wholesale throughout the rest of the world. And that's also, from a bullish perspective, good for inflation, because that means if wholesale prices are falling 0.6% month over month, it's marking the 3rd consecutive month of decline. Overall, across the world, we want to see this stuff decline, which is a good thing. Fruits were up 13.9%. Sugar was up 8.9%. Beverages were up 7.1%. Tobacco up 6%. So there were increases in some categories, but overall was down 0.6%. Second of all, Sweden's inflation rate. Sweden's inflation slowed to 4.4% from 5.8%, which is a pretty decent decline. I mean, you got Sweden coming down from 5.8 to 4.4, which is almost 11, basically 11 basis points right there. And it's near the market estimates of about 4.3. This is the lowest rate of inflation since February 2022. And take a listen to this. The reason it's the lowest inflation rate since almost 18 months ago is because of a significant drop in housing and utilities. I think in the next 2 months, this is going to be the exact same story that we see here in regards to American inflation, which is that housing, and maybe not utilities, but overall housing, shelter, rents, etc., are going to lead to dramatically lower levels of inflation. And remember, housing is one of the main components of inflation, along with used cars, which, if you heard Tom Lee over the weekend, is likely going to be declining as well, and energy, which had an uptick because of some oil volatility in December, but I think that'll come down, hopefully, if this Red Sea situation is resolved soon. So we're seeing Sweden's inflation come down as well. Monthly CPI growth increased by 0.7% compared to 0.3 rise in November. Finally, last bit of macro news I want to talk about. India's wholesale price increases from December 2023 climbed about 0.73% year over year. Less than market predictions of a 0.9%, following a 0.26% growth in November. Again, we are seeing that even though prices are rising, these prices are rising at a smaller rate of growth than what they were rising before, which means, yes, it's not the best for inflation, but it's definitely not the worst, and it's something that's under control and it's tame, which is a really important thing as well. Their manufacturing prices were down, continued to decline at 0.71%, with notable drops in textiles, basic metals, chemicals, rubber, plastic, paper products, food products, etc. The reason I also want to keep an eye on India, and what I'm also going to make sure Macro Darts keeps a really, really big eye on, because a lot of people, I think, have heard of this, but maybe we're not keeping a super keen focus on this, is Mexico. Okay, Mexico and India are becoming, if you just look at some of the data, Mexico exports, I think we're up 23% year over year in comparison to some of the other big countries that do exports. And it was really interesting to see. It's like, why are all these countries going to Mexico? What are they seeing in Mexico? What are the growth opportunities in Mexico in terms of being able to bet on some of the companies? I know the big one is Mercado Libre, but outside of Mercado Libre, just wholesale shipping centers in Mexico and the factories that are popping up between Mexico and India, I think are something from a macro perspective we very much need to take into account. So that's something that macrodarts.com is going to be covering a lot more. We have a lot of macro news to cover. I mean, we're covering sort of the bare basics right now, just like inflation, PMI, CPI, wholesale prices, etc. There's a lot of stuff this website is going to cover. So macrodarts.com every single day, 5-minute read, gets you all the macro information. And there's a lot to cover in regards to particularly India and Mexico. But those are the macro news updates for today. Okay, cool. Petro says you become a habit. Petros, thank you for being here. I appreciate it a ton. It means a lot. And this is super awesome that you are here for today. All right, so we talked about a bunch of macro news. I think we should do Palantir next. Let's do Palantir next, and then we'll get on to some of the Bitcoin stuff, because we got a ton of stuff to talk about on Bitcoin, but I want to get this one Palantir thing done first. Okay, so I'll be talking about this more in depth on the Daily Palantir episode that comes out later today. But we have some updates from the NHS, okay? We have some pretty dope updates from the NHS. And did you see Daniel Ives on the Animal Spirits podcast? Yes, I did see him there as well. Super good stuff from Dan Ives. I think he was on the Compound and Friends this weekend, so it was fun hearing him talk a lot more about AI. Okay, here's the Palantir news. The waiting list for the NHS staff to treat more patients has fallen a lot in the past month, okay? You've got 95,000 people that have come off the list down to 7.6 million on the list from 7.7 million in October. Why did this happen? The progress was down to the NHS staff delivering more than 1.63 million treatments in November, the highest monthly activity on record, and around 150,000 more than the month before the pandemic. The number waiting over a year for treatment fell to 355,000 in November, the lowest it has been since May 2022, with 65-week waits now down 59% from a peak of 233,000 in June 2021 to just 94,000. NHS staff also delivered a record number of diagnostics in November, up with more than 2.3 million patients receiving vital tests for checks for worrying systems, up 15% on the same month pre-pandemic, with 2 million seen in November 2019. Okay, now, why am I sharing this? Well, I think there is some level of an obvious correlation between Palantir's efforts to be able to implement the federated data platform in the NHS and the NHS having their best month in the past 18 months in regards to reducing backlogs and wait times. Now, here is the boom. Here is the kind of the bear case against what I'm saying, or the pushback. Wait a second a bit. Palantir just got the deal in November. So there's no real way that Palantir getting the deal in November establishes their ability to, somehow make all this progress with the NHS. And I am sympathetic to that claim. However, there's kind of two arguments here. The market is closed, guys. For those that are asking, the market is closed. We're just doing a market open because I'm not going to be able to do it for the next 2 days because I'll be in California. But also, there's still a ton of news to talk about, so why not? I just put the link in the chat for the NHS news for Dan, who was asking. Okay, so I'm sympathetic to the view that Palantir, just got the deal. So how are they responsible for the NHS updates? Well, if you remember, the NHS didn't just wake up and give them this deal, right? Palantir's been working with the NHS for a pretty long time. Here's an article from UK Authority. NHS England said that 26 trusts, which are basically hospitals in the UK, have been running pilots of processes that will be supported by the FDP with benefits including better organization of clinics, waiting lists, shorter waiting times, and reductions in hospital discharge delays. In fact, if we go even deeper here, okay, since March 2022, Palantir had already been spreading to 30 different trusts and showing results in Chelsea and Westminster. Let's read from the Financial Times. This was released in March 2022. The U.S. company's data processing technology will be spread across 30 different hospital trusts, bodies that organize healthcare in regions across the country in March 2022, in a bid to help cut the NHS waiting lists that have been spiraled since the coronavirus pandemic. The rollout comes after a recent pilot of Palantir's Foundry system at the Chelsea and Westminster Hospital Trust that helped reduce inpatient waiting lists by 28%, the equivalent of tens of thousands of patients for all non-emergency surgeries, including for cancer treatments. Now, notice what I read on the recent NHS website, the one I just shared, I'll share it again, is that the biggest decline they've seen in terms of patient waiting lists is from pre-pandemic levels. And when Palantir was implemented in 2022 at 30 different trusts all across the UK, the goal was to try to bring the waiting list down to pre-pandemic levels. Why? Because pre-pandemic things were bad, but they were manageable. After the pandemic, nothing was manageable, right? Everything just went to shit. So I think there is a high correlation. I'm definitely not attributing everything the NHS has done this month, which they've had a phenomenal month at, to Palantir, right? Because I'm pretty sure it's going to take at least the next 6 months with the Accenture consultants working with Palantir to implement the software at every single hospital that exists and make sure it gets everyone fully ready and going. However, when you've got 30 hospitals that already have a version of the software, and all they need to do is flip a switch now that the deal is in place and they can upgrade to all the latest features of the software and everything else can be implemented because they already have been running it, basically, then I think some of those results are incredibly easy to attribute to Palantir software. And as long as the results keep coming in, quite frankly, it could be Palantir software, it could be a potato, it doesn't matter. Palantir's going to get the credit. It seems like Palantir is the one that's, actually doing it to get the credit right now. But that's really exciting for Palantir. And I think that's also really good for Palantir to be able to get that benefit and for the NHS to see results. Now, if the NHS keeps putting up these results, again, the bull case for me, lots of other companies around the world, along with countries, healthcare companies, hospitals, and overall socialized medical systems like you got in Sweden and you got in the Netherlands and you got in Canada, they're going to start to notice what Palantir is doing. Brazil has one of the largest national healthcare, systems in the world. And I think if they start to see what Palantir is going to do with the NHS and they get them the right results, those opportunities start to open up for them. So super exciting from that perspective for Palantir. Okay, let's move on to Bitcoin and Coinbase. We've got Davos, the World Economic Forum happening right now. And here's the Coinbase CFO. and her thoughts on everything that has happened with Bitcoin in the past 10 days. It's been a very eventful 10 days. So let's hear from her, Davos CFO or Coinbase CFO, talking at Davos, which is starting today, on what's going on with Bitcoin.
Talking about ETFs on Bitcoin last week, it was quite exciting to see it approved, although the SEC said, look, this is not a value judgment, the fact that it's approved. Do you see momentum from this being quite a game changer?
Absolutely. This was a landmark day for crypto. This really brings Bitcoin into a much broader investable asset class for trillions of dollars of assets. Previously, RIAs, many wealth managers, pensions couldn't access spot crypto, and this gives them a vehicle. It gives them a very familiar wrapper that they can now access through the traditional securities markets. So we think this is a wonderful step forward, bringing crypto to mainstream and bringing our goal of bringing crypto to 1 billion people around the world.
So Alicia, have you seen an uplift? Have you seen momentum from last week? Have you had extra
We've definitely seen dollars flow into the ETFs. What I'm so proud of is the markets have been stable, though. This was a long anticipated transition, and we're starting to see the gradual growth that we expected.
What does it mean for hiring, for example? Are you hiring more people? If you look at Coinbase in the next 12 months, where are you hiring and to what purpose?
You know, we have been really happy with our headcount over the last year. We are being incredibly efficient. What we saw last year is we brought our costs down meaningfully, but our product expansion grew tremendously. We introduced Base, a layer 2 blockchain. We grew derivatives, both in the US and outside the US. We introduced an international exchange, and we launched in many countries around the world. So we are seeing growth and efficiency. We're going to be adding headcount in 2024, but it will be all in pursuit of our roadmap. So growing internationally, continuing to expand to our retail and our institutional customers.
Any regions particular that you're looking at? Or are you, for example, moving some of your US-based employees outside the US elsewhere?
No, this will be net new hiring in new local markets.
Okay, what are you most excited about in the next 12 months? You know, crypto and exchanges have had a bit of a wild ride over the last 18 months. Are you expecting stability, or are you still kind of on the lookout?
It is so important to zoom out when you look at crypto. So I've been at crypto for 6 years. Coinbase has been here for over 12 years. We've had quarters and months that were up. We've had months that were down. But when we zoom out, we've had this really nice upward trajectory over time. Growth in users, growth in products, growth in countries, assets, crypto market cap, but it's on a long-term basis. We are investors for the long term. So what I'm excited about for the next 24 months is just continuing to roll out products to our customers. We're looking to really grow our institutional product offering. We're looking to expand internationally. And I think we're going to see a lot of activity on our layer 2 solutions. So it's going to be a good year.
Someone said, Inbound says, are they actually outside? In Davos, I think they are actually outside. Maybe they have like some protected area where they're at, where there's a little bit more heat, so they're not literally freezing. But when Karp did the interview last year, you could see the smoke coming out of his mouth, right? Because it was pretty cold. So, yeah, because she's talking pretty eloquently for someone who theoretically should be freezing, which is very suspect. But in terms of Coinbase, man, it's really interesting. Carnegie C7 in the chat. Hi, all. Morning, mate. Good morning. Thank you for being here. Let's take a look at Coinbase's stock. Obviously, the market's not open, but I still just want to take a look at it. Coinbase got hammered on Friday. And Coinbase now, after hours, $129. Guys, this was a stock that was $178. Okay. $178. I mean, look at that. Sorry, $187. December 28th, a 187, and it's down to 130. I mean, and Bitcoin at the time, this was 187. This was December 28th. Okay, Bitcoin December 28th. What was Bitcoin December 28th? December 28th, Bitcoin was at this is incredible. Bitcoin on December 20th was 42,403. Coinbase was 187. Okay. Bitcoin today is basically the same price. And Coinbase is down. I mean, let's do the math real quick. Let's do 187 minus 129, 187 minus 129 divided by 187. It's down 31%. So Coinbase is down 31% at the same time where Bitcoin is flat. We know Bitcoin ran up to 49, but then it came right back down to the same exact price it is. I mean, like within $10 or $15 the day that Coinbase hit all-time highs or 52-week highs. I mean, dude, it's like it's a roller coaster if you're in that stock. There's a lot of people that I know that had leaps on this bad boy. They bought it at $45. And I don't know what they're probably like $100, $120 strikes on those leaps. They were up a lot when it was 187, when they were fully in the money. And now they're barely in the money. They're still probably up. But I mean, if you didn't sell, you lost a lot of money just in terms of on paper, or if you bought anywhere above 140, you're in the red. And so with Coinbase, it's really interesting because I think the market gave them a lot of basically premium on the fact that the institutional custodian product they have is going to print tendies when the Bitcoin ETF got approved. And the Bitcoin ETF got approved. And now the market's kind of just like, well, the ETF was kind of a flop in regards to the price action on Bitcoin. It was a massive sell the news. I mean, you can't tell me it was not a sell the news. The news came out and the thing sold off. And it sold off dramatically, 49 to 42. And it was not fun, right? And now people are thinking maybe it hits 38 and that's where it bottoms. We'll see what happens. But Coinbase got hit pretty badly. All the miners got hit pretty badly as well. CleanSpark, $8.12, down 12 cents, down 12% on Friday. As you can see on my screen, all crypto, Hut 8 mining down, Cypher down. MicroStrategy also just got demolished. MicroStrategy was $727 on January 2nd. MicroStrategy is $479. Let's do some good old mathy math. 727 minus 485, minus 45 divided by 727 is a 33% decline. So Coinbase is down 31%. MicroStrategy is down 33% as well. Yeah, like we've got a decline. We've got a decline in a lot of these crypto stocks. It was also 300 2 years ago. Yeah, but like again, remember interest rates were non-existent at that time, basically. So now in this interest rate environment, for it to get closer to that $200 range that it was at last time at 187, it was just really surprising to see it fall off. So obviously we've seen a decline in Bitcoin. Now, what I've heard from my due diligence is that BlackRock had to acquire a ton of Bitcoins OTC or over the counter. And they are struggling to actually have access to the amount of Bitcoins that they needed to buy. And so they went through a variety of different sectors. Coinbase also was one of the companies that probably sold them some of these Bitcoins because they need a ton of Bitcoin to be able to offer, obviously, for the ETF. So it's not like the demand side wasn't there from the BlackRocks, from the ARKs of the world, from all these different companies. I mean, all of them had the money to spend. All of them wanted to spend, and all of them were willing to buy a lot more Bitcoin on behalf of their clients. The problem is there was some sell side pressure. And GBTC, Grayscale Bitcoin Trust, that's where we saw the most sell side pressure. I think something close to like $800 million or something of outflows existed, even though there was like $2 billion of inflows from the data I was seeing from Bloomberg. So there was definitely a net loss in regards to outflows that were happening, even though the volume of the crypto trading within the first 2 days reached about $4 billion. So the problem is there were people that sold the news, right? That's what the explanation for why Bitcoin sold off is there were too many people that had sell side orders ready to go, even though the buy side demand came in order to be able to pick up a Bitcoin. Now, what does this mean for Bitcoin overall? I think a lot of people that are freaking out about Bitcoin, it's been 2 days since the ETF got approved, right? There is a lot of catalysts that exist. This time is reminding me of January 2023, where there was so much panic in regards to certain sectors. Obviously, the entire market was down. The entire market is not down right now, but there was definitely panic in different areas. And I think that same panic when Tesla was at 100, Palantir was at $7, and you thought the world was falling apart in January 2023. And if you bought the dip, I mean, you really did well. The same thing is kind of happening here with a lot of the crypto and Bitcoin stocks, because if the thesis plays out to be what it should be, which, the halving event, there's all these different catalysts that are happening, then Bitcoin should be fine. The only caveat I'll put there is that Bitcoin is up 70% the past 3 months. And so there were a lot of people saying, you know what? What if the ETFs are priced in because the sucker is up 70% in the past 3 months? And then you have the whole sort of Bitcoin community saying, no, it's not priced in. It's not priced in. It's like there's still a lot of room to go. I mean, so far, the people that said it was priced in, they were right. It was definitely priced in, right? So, I mean, from that perspective, I think that so far, the ETF has been priced in and has actually been sold off, and we'll see what happens. Right now, it's super, random right here. And, we'll see how Bitcoin ultimately performs throughout the rest of the year. But as of now, it has been sold off, and I think a lot of people are waiting for it to have those catalysts to help it come back. Austin says, what's up, Amit? I just put in my 2 weeks at my job now for a new accounting role. So you're quitting your job? That's what it means, right? When you put in your 2 weeks at my job for a new account, or you're quitting the old position. Oh, you said you're quitting your job for a new accounting role that you're getting. Okay, that's awesome. So you're quitting your previous job and becoming a accountant. That's awesome. I love it. I did not do that well in managerial accounting at my school. I almost failed, and I somehow figured out how to not fail. But shout out to you. That's awesome. I'm really, really happy you got a new job. That's great. That's great. Look at the other. I look at after hours for Bitcoin ETFs. DeFi is the only one that's up, and that's a full 5%. Yeah, and that that also comes down to like why are some of these ETFs performing kind of differently. They operate in a lot of different ways. ARKB was down 5%. Then you got IBIT, the BlackRock one, down like 3%. Like there's a lot of different nuances to how they're performing, but overall, they're not going to do well if Bitcoin gets back into that $30,000 range, which from the technicals charts that I'm seeing from a lot of people on Twitter that I respect in regards to Bitcoin, they're saying 38 is very possible just as like a bottoming event. And then we move forward, which if you look at the past cycles, I mean, that 2021 rally, I think it went from like 40 to 20 and then it ran up to 69. If you look at the V chart. So it's obviously, the nature of how this asset performs is just incredibly volatile. And yeah, let me actually show you guys this right here. So this is what happened back in 2021. 9:30 a.m. Yeah, the market's not open. I didn't even realize that. Yeah, we're not going to ring the bell today, but we're still here on the market open because the show never stops. Okay, so here you go. Bitcoin was at 61K. It fell. This was 61K. What? April 2021. 65 at the top. It fell to 32. And then it rallied to 69. It fell to 32 by July, so April to July. Then it rallied to 69 by November. Quite incredible, honestly. Honestly, quite incredible. And the idea that wouldn't happen again, I mean, it might happen again. It might happen again. Sometimes I don't feel lonely with this live stream. Vishal, thank you for being here. I hope that the goal is to make sure you're not lonely. But remember, the whole point of the live stream, the reason why we do it every day is because it's a community, right? And it's super fun. And as the community grows, we just get more and more people to join. And, eventually we get guests. And like, I have so many plans for this market open to become really, really fun over the next year. But yeah, I really appreciate you being here and glad you get to not be too lonely. The Canada market is open. Ring the bell. The reason we're not ringing the bell for the Canadian markets is because we're not going to be trading shares of maple syrup all day. All right. We've got a lot more important things to do. We're not going to be just trading shares of maple syrup all day. There are plenty of more important things to do. And so that's why we're not going to ring the bell for the Canadian markets. No, I'm just kidding. It was funny. I made that joke yesterday on Twitter and someone's like, yeah, but what about Shopify? And I was like, oh, the one token Canadian stock that everyone brings up. Thank you, Mike, for the update. Shopify opens up slightly down or flat, down 0.9% currently, 0.19%. Bitcoin miner Bitfarms also dual listed down 2.47%. Makes sense that Bitfarms is down. Shopify has had a great run. I think all-time highs are 52-week highs at $82. So makes sense that Shopify is down as well. But like, what's the other Canadian stock besides like Shopify that we even talk about? Like seriously, what other I mean, I know there's the weed stocks out there, but like it's Shopify and that's it. From like, I don't know, there's Shopify and it's Shopify. Shout out to Shopify. They did a great job, but like, come on, Canada, you got to incentivize some entrepreneurship because you can't have one dude who's the face of your country. Like you got to have some more stuff out there. Hey man, at least our banks don't fail. Okay. That's a cheap shot. That's a cheap shot. Granted, look, the banks that failed in the United States, if you're talking about recently, are the banks for the rich people that, no one really cared that Silicon Valley Bank collapsed that much. First Republic. Like, obviously the broader economic sector cared. But like, you talk about average everyday Americans. Bank of America fails. Yeah, we care. But Silicon Valley Bank had billions of dollars of rich people's money at the end of the day. And so did First Republic. So, I mean, the average American did not care. Now, granted, if that, festered into the regional banks, which it did, but it didn't. Just their stock prices fell, but the regional banks themselves were fine. That would have been bad. But you are right. At least your Canadian banks don't fail as much. Okay, so I wanted to show something else right now. We talked about macro news. We talked about Palantir. We talked about Bitcoin. Oh yes, this. Here's what I want to say. So for some reason, there is this narrative that is going on around the world, or maybe around the Twitter circles that I'm in, that Tesla's going back to $100. Okay. So I tweeted this. I said, let's see if we get sub 210 Tesla this week. I bought 10 shares last week at about $218 average on Tesla. And I said, let's see if we get to below $210 this week because my dry powder is ready to go and I want to buy another 10 shares. And then I got a bunch of comments. This was just one of them that said, for sure, it will go below $100. And so I wanted to ask you guys in the chat, what is the reason you think that's going on for why Tesla and this narrative on Tesla is forming for why it'll fall below 100 or get to like 130 or whatever? because I don't really understand where this narrative is coming from, particularly. Thomas says we don't have the money for rich people banks. That's hilarious. I love it. But this narrative exists, right? This narrative exists. And so I commented like, yo, I'm gonna go full port Tesla at 99 outside my Palantir, obviously. If that happens, if we fall to even 120 on Tesla, like I just can't imagine that dip not being bought before we get there. And there was a decent amount of people in the comments either disagreeing with it or saying, no, it's actually possible because we got to close the gap at 82, which I don't think is going to happen. I know gaps get closed, but I don't know if that one's going to happen. But a lot of people were saying, look, Tesla is going to be a buy right now. I agree with this person right here. The technicals are a screaming buy. I do think that obviously the earnings report is not going to be the best going forward, given the Berlin factory is shutting down for a month in terms of its production. And they cut their prices on China. 25% of their sales are in China. And so you're going to expect some operating margins to get cut in regards to profitability. So it's not like it's going to be a fantastic next 2-3 quarters. But $99 on Tesla, like, I just don't think that's happening, dude. And if it does happen, I'll be very happy because, I will sell plenty of different things to buy some Tesla at 99. But I don't think that's happening there. I sold all my Tesla the day the truck was introduced. I failed. Interesting. Okay. Honestly, it wasn't a bad sell because I think Tesla was at 250. So now you could get back in cheaper based on your average. But I think the Cybertruck, we've been seeing a lot of videos and images of it going around. Look, it's not going to get free cash flow positive for the next 18 months, but it's a hell of a product. I know Tesla bears that became Tesla bulls when they stepped inside that car and actually took it for a drive. And they were like, this product's going to sell immediately. Like, there's no way this product doesn't sell out like gangbusters. So Elon said it's not going to be free cash flow positive for the next 18 months. It's going to be hard for doing that. But I think the product itself is going to get a lot of people excited. Martin says we also need to see significant progress on the 4680 cells. Yes, I agree on that as well. The progress on that is also going to be one of the geometric ways that Tesla begins to scale, because that $25,000 car, that Cybertruck, they're not going to scale in terms of production unless battery production scales as well. Like, the unique thing about Tesla is you can look at commodities, you can look at lithium ion prices, you can look at how the vendors of the factories that are making the batteries are able to scale, because all of those macro data points actually gives you a very good understanding of how the stock itself can perform, because you just have a better understanding of how the business is doing. The one thing I think Tesla shareholders have never had to worry about is demand. Like, there were 2 times I think we focused on demand. Once was when the Morgan Stanley report came out in 2019 that said demand was horrible, and like they said Tesla is $10. If this was the stock was at 170 pre split, and they said it's going to $10. And I think the stock tanked like 150 about it. It was just a horrible report. But that was the concern about demand in May of 2019. And then a little bit last year, because of some of the stuff going on with China, there was another concern about demand. But I think from all the data we've seen over the past 18 months, I don't know if demand is the issue. Everyone wants a Cybertruck. There's 2 million on waiting list. Tesla, sells out as soon as they get these cars. I know the wait times to the delivery of the vehicles has gone from like months to weeks, but that's not really a demand problem. That's substantial. And then in China, even though, BYD is there and they're coming for Tesla's lunch, just in terms of how competitive it is, demand is not subsiding in those places. Obviously, the price cuts that happened last year made people think demand was an issue, but I don't think that was because of just pure demand for the product. I think that was because of interest rates. Like, the reason Tesla cut prices is because no one could afford these damn cars. It wasn't because they didn't want those cars. It wasn't because like they wanted Toyotas more than Teslas. It was because it was expensive, with interest rates being at, the highest levels they've been in the past 40 years. So I think for Tesla shareholders, we've really never had to worry about demand, but a lot of these internal issues like factory scaling and the problems that are going on with Germany and the issues in the Red Sea, that is what has been the larger concern. However, I don't think we're going to $99. I don't think it's happening. I just don't think that's happening. Martin says China demand is nuts. Every quarter is a new record. Yeah, like it's very exciting for what they're doing there, and I don't think that's necessarily falling off anytime soon. As soon as interest rates start their cuts, Tesla moons. That's the other thing. I think a lot of us forgetting. Like, look, we had the Powell pivot about interest rates, but we haven't had the Powell cut. When the Powell cut happens, as long as everything else in the economy is okay, it's going to be a very exciting time for a lot of these growth stocks, because investors are going to want in. and demand is going to increase as rates get cheaper, and it's easier to say that I want to buy a Tesla or I want to buy solar panels, right? So I think that's also going to be very exciting as well. Speaking of interest rates, let's get an update from Guggenheim's partners Ann Walsh about why the Fed is going to lower rates sooner than the market expects.
Says that she expects the Fed to begin cutting rates in March. That's in direct contrast to Cleveland Fed President Loretta Mester, who will vote on interest rate decisions this year. Mester said yesterday that March is likely too early for a rate cut. Ann Walsh is the chief investment officer of Guggenheim Partners Asset Management. And first of all, thanks for being here this morning.
Thank you very much for having me.
So yesterday, the CPI came out. It was a little hotter than had been anticipated. And when you look through some of the lines, today we get PPI. And obviously, we're all trying to figure out what the Fed does next. Where do you think we are on track with this economy? What do you think the Fed will do?
So as was introduced, we do believe that the economy is continuing to slow down. Inflation is also on a disinflationary track. Yes, the CPI print at a headline level came out pretty hot, particularly as regards owner equivalent rent. But if you look through to the component parts of the report, that really still indicates that PCE, core PCE, which is what the Fed really looks at, is still on track to be right around 2%. And I think that's critical. Additionally, what we're seeing evolve in the economy is kind of a bifurcated economy, and that is there's those companies that are doing pretty well, and then there's sections of the economy that are really slowing down significantly. For example, manufacturing has been in a bit of a slowdown, if you know, maybe a recession, if even over the last, say, 18 to 22 months. And so as a result, what we're seeing is this sort of bifurcation happening, and the economy is continuing to slow down. We remain in the camp of believing that we are still seeing a recession, although mild. It's always been our expectation that it would be a mild recession. And, you know, I tend to refer to it as a rolling recession. Depending on where you are in the economy is how you're going to feel about the economy. And what's coming next is really commercial real estate, office properties in particular. And so we're still in this sort of evolution, if you will, of slowing parts of the economy down. We think this leads to the Fed being more in line with historical precedent in terms of recessionary environments.
Okay, so her base argument is essentially, look, if the economy is slowing down, which is the sort of key for this mild recession argument, we will have rate cuts sooner than later. I just don't think yet those are happening in March. And I would love to be wrong about this, because if January, February CPI data is great, then March we're probably closer to at least a 25 basis points cut. But if January, February is not even like bad, but like not even like not amazing, right? Like it's like, let's say we're at 2.9% by the end of February in terms of our CPI. So we're in the twos, but we're not substantially in the low twos. I don't think Jerome Powell has a reason to cut. Like there's no reason for him, unless he sees something breaking, to be like, oh, like it's time, right, to make the move, because you're beating inflation. Like you're still winning. It's down in the twos now. So I think that means like May is more likely versus March, unless inflation gets to like 2.6, 2.7. If that happens, then I think we're getting a March cut. Some of you guys are a bit mean in the chat, but like, you know, the CNBC people that come on, they are public people. So I guess we will get some jokes in the chat. Say anything you want. We got a fun chat for this market open. We definitely have a fun, even if it's a little mean, we got a fun chat. Okay. So I want to play a clip now. Here's a question I asked on Twitter over the weekend, and I want to know everybody's answer. And then I want to play this clip. My question was, 5 years from now, 2029, the Mag 7 is now the Mag 6. NVIDIA, Apple, Microsoft, Google, Tesla, Amazon, and then Meta. Which company do you take off the list in 5 years? I'll say my guess after, but let's take a look at Cantor Fitzgerald and what they had to say, what companies they're not a fans of. But put in the chat, 1 out of the 6 has got to go by 2029. You got a 5-year time horizon. And then I'll tell you guys which one people on Twitter thought would be the most likely to leave.
Joining us now is Cantor Fitzgerald, head of derivatives and cross asset, Eric Johnson. Eric, good to see you. So, boy, you've been bearish for a while, and I know it's a new year, but how does that pan out now? You think you should be short, low quality, small cap. You don't think the growth trade is going to work for too much longer, but I guess you can't look at Bitcoin because it's tended to be good for that low quality stuff, and it's been higher.
Yeah, so thanks for having me. So we think that that the mega cap outperformance that we saw for most of 23 is going to resume itself, and it's going to come. We think that ultimately, low quality, small cap, cyclical is going to underperform, and we think that trend is going to persist.
Remember, by the way, this is the guy that missed the entire 2023 rally. He's been like completely bearish all of 2023. So his argument is that we will get this massive economic collapse in the stock market this year. It didn't happen last year. And so that's kind of his perspective here.
Until we see a economic downturn. But until then, we like the Mag 5. We're not a fan of Apple and Tesla, as our clients know, but we do like the Mag 5, and we do like other large cap, high quality names. We think this is an environment where they'll do very well. And if you look at there was a lot of excitement came about at the end of last year around small cap and cyclicals, and we didn't buy it. We thought it was very much a trading year-end phenomenon. But when you look at the fundamentals of small caps, their earnings estimates have been declining. They had negative year-over-year growth. They're most hurt by higher interest rates. They're most hurt by credit contraction. So this is not an environment that is favorable for that group. And yes, they've underperformed a lot over the last year, but that's not a reason for that to change. And so we think this trend is going to continue that we saw in 23.
And you think long end bond yields have just about found a floor here. What does that mean for what you do with fixed income versus equities, and at what duration?
So we think that fixed income looks, far more attractive on a risk reward basis than equities. Our view is that when I say that bond yields have found a floor, I think that until the market sees the economy really weakening, if you look at the 10-year yield example, we think it's going to find a floor in that 385, 390 area.
Okay, again, we got the chat. Just this guy points his hairdryer at his face. What the fuck? Oh my God, this guy can play the Joker in the next Batman movie. Dude, this is great. Billy, thank you for being here. Now we can start the show. You're 47 minutes late, but now we can start the show with Billy. This guy got the Newsom special at Supercuts. Oh my God, you guys are is ruthless. Okay, so my pick is Apple. I think in the next 5 years, Apple's out of the Magnificent Seven, and I don't say that just to pick on Apple, because I know it's fun to pick on Apple right now. I'm looking at the other alternatives. I asked the same question to Steve, and Steve said it was Amazon. And I get why he would pick Amazon, but I don't think it's Amazon. Like, at the end of the day, the Vision Pro has to take off. Okay, we're not buying the AirPod 57. iPhone 17 is not going to sell. iPad 50 trillion, whatever. Is like they can keep releasing these hardware products, and unless there's substantial improvements, which I just personally don't believe they're going to, like, I'm not upgrading this iPhone for the next 4 years. I didn't upgrade my last iPhone for the past 3 years, right? So like, it's going to be very hard to get more dollars out of consumers that are buying these expensive products already, which means services has to increase, which yes, that can increase. I don't know if that's enough to sustain them in the top 7 for the next 5 years, or the Vision Pro has to take off. Maybe the Vision Pro does take off, and maybe all of us are underestimating the extent of the Vision Pro. I personally don't see it yet. Maybe I'll see it in another year. But if the Vision Pro doesn't take off, NVIDIA, I don't think is getting off that list, even though NVIDIA's growth will slow down eventually, but I don't know if it's getting off that list. Tesla, I definitely don't think is getting off that list. Meta is just going nowhere. Like, if you want to advertise anything, you have to go to Meta. Meta's going nowhere. And then my second guess is Google. I mean, the only other guess besides Apple, I think, is Google, because they would suffer from search being commoditized, which is very possible. I mean, search could absolutely be commoditized. You said the iPhone 15 wouldn't sell until you bought one. Yes, but remember, I was upgrading after 3 years and I got $800 off, which you put those two things together, I'm like, all right, I'll buy. But if I had to pay $1,100, dude, I'm not buying an $1,100 phone. Like, there's just no way. Like, Verizon gave a good deal, so that's why we did it. And so I agree with Martin here. Tesla will outperform them all. Energy, Bot, Robotaxi. I think Tesla's the one that's the safest on that list, even though Tesla stock has been stuck. Honestly, Google and Apple. And look, maybe if I had to redo this tweet, I might have said Google over Apple if I really sat down and thought about it, because there's a company that's out there right now. Okay. I don't know if you guys have heard about, well, this will be a really good test to know if this company is actually taking off. Okay. I'm going to say a name of a company, and I want you guys to tell me if you've heard of this company yet. because it's one of those tech products that's not mainstream, but they just raised a shit ton of money, about $73 million. They're now valued at $500 million, and they are being seen in the tech circle. They've gotten a lot of praise from people like Toby Lucht, the CEO of Shopify, that is now using them every day over Google, as one of those products that's just like, again, proving how vulnerable Google is, because it's not like they're taking away market share from Google, but it's like the fact that they're able to raise this much money means investors see there's another thing out there that's trying to compete with Google, and it's not just ChatGPT. Unkid got it. Perplexity. That is the name of the company. Perplexity.ai. This is an app that is essentially a search engine. They raised $73 million just a couple of days ago. But they're not like a ChatGPT. They're like a search engine that uses like AI to generate answers, but also give you web links easily. Like, I think it's like ChatGPT browsing with Bing, but way better. It's like, you know, on ChatGPT, if you type in something and it's like browsing with Bing and then it gives you some bullshit, like it's that, but way better, because browsing with Bing sucks on GPT. Like, I hate when it gives me, like, it's just horrible answers. But if you do it with Perplexity, it's actually pretty integrated and pretty strong. And it's been a decent search engine that I've been using. Unlike traditional search engines, Perplexity offers a chatbot-like interface that allows users to ask questions in natural languages. The platform's AI responds with a summary containing source citations at which a user can follow up questions to dive deeper into a particular subject. Let me go to their App Store ranking right now. Perplexity on the App Store is at it is number 68 on the productivity list. So you would estimate it's probably getting 10 to 20,000 downloads every single day. Have you guys used this in the chat? Have you guys used this? Have you guys used this? No, a lot of people don't know about it. Yeah, a lot of, okay, so it's not that Adam says it's a shitty name. So a lot of people don't know about it yet. So it's a very small fish in the broader ecosystem. But in general, right? Like, this is another reason why Google is just like, look, I have money in Google. I have about 10 grand in Google. I'm bullish on Google. I think Google will be fine for the next couple quarters. The free cash flow and the buybacks alone, if you just care about the stock, it's going to pump the stock. Like, I think Google, Google is 200 by the end of the year. That's not financial advice. That is my own price projection. I think that's going to happen, just given the sheer amount of buybacks and free cash flow. Even if they lose some market share, I think the market's still going to give them the premium because the buybacks are going to be enough to raise the earnings per share. However, there are these companies that are popping up left and right, raising a shit ton of money, that are just taking people away from Google. And Google is just so big. Like 88 billion times people go to Google every single month. 34 billion times people go to YouTube every month. Okay. So you got 34 billion, 88 billion. You've got so much traffic on Google that like a red light on their traffic stop doesn't exist. It's just green, green, green. But if that starts to decline, which there's a lot of these startups out there trying to take a little bit from them, you're going to see it in the numbers. I just don't think that's going to happen soon, which is why I think the investment thesis in Google is intact. But I think it's Apple and Google. I think it's Apple and Google over the next 5 years that might be the ones that are susceptible. Someone said Palantir just posted a new video. Oh, wow. Okay, let's take a look at this. Palantir just posted a new video real quick. Let's see what they posted. It's a 22-second video. What did they post? Okay, here we go. Here's the new video from Palantir. Just posted 1 minute ago. Is there any volume? There's no volume to this. What the fuck is this? What is this, dude? What type of cryptic shit is this? Okay. So let's quote tweet it. What is Palantir trying to say here? I don't know what the heck they're talking about. It's just their stock chart barcoding. It's the stock. Well, you know, I think the reason they're tweeting this, guys, is they're at Davos today. They're at the World Economic Forum. Alex Karp is there. So they might be making some announcements around AI and stuff. We might be getting, here's Lewis Mosley, head of the UK at Palantir, meeting with Mikhail Fedorov, who is one of the defense ministers in Ukraine. And so they're meeting right now. That's really interesting. I wonder what they're trying to say. Okay, cool. So we talked about that. We talked about Meta. sorry, we talked about that question I had about which company you think would be there. So most of you guys in the chat, some of you guys say Meta, some of you say Apple. I don't think it's Meta, dude. I think Meta's not going anywhere. The thing about WhatsApp, I think that people are forgetting, or about Meta, is that WhatsApp hasn't been monetized. WhatsApp has not been monetized. That WhatsApp to me is like a $500 billion business when it monetizes. Like the scale of WhatsApp is unprecedented. And so that to me, I think where is going to be their growth curve, along with the Quest, even though I'm not the most bullish on Quest, but I think the ads business itself is just going to be so good. Like I think this quarter is going to surprise people. Perplexity is a private company. Yeah. So I guess you guys have never heard of Perplexity. It's a very perplexing name, but it's a company that's valued at $500 million, and they're trying to take on Google, and they're not alone. There's a lot of them. So look, at the end of the day, I thought like a year ago, look, no one's taking on Google. No one's beating Google. Google is the king. I've evolved my thinking to kind of reconcile that if the user experience fundamentally is better on a different platform, like the people who use DuckDuckGo, I just like you guys are just forcing yourself to use DuckDuckGo. You don't actually like using DuckDuckGo, right? But now I'm thinking, well, if the user experience is really that much better on DuckDuckGo or Perplexity or ChatGPT, people are just not going to use Google. Like it's just that simple. They're just not going to go there. The problem is Google's introducing generative AI, and I think Google has such a stranglehold on our lives that it's hard to just leave Google, even though you're finding something better. And so that's kind of the problem, I think, for Google as well. Vitaly Science says everybody in India uses WhatsApp. Yeah, that is true. Everyone in India uses WhatsApp, and it's actually, I mean, it's just insane how much penetration they have in the WhatsApp in India. Amazon is adding ads to Prime on January 29th. That's going to bring huge money as well. I'm not paying for the upgrade because I barely watch Prime, so I'm not going to pay them the $3 extra to watch it without ads. So if I ever watch something on Prime, I'll watch it with the ads. But I guess there are going to be a certain amount of people that do. And Amazon's already doing $44 billion TTM on advertising. That's probably going to be higher, given that they're going to start having more ads in Prime TV, or just more top line revenue on Amazon Prime, because people are going to pay to opt out of the ads. So that's another reason it's hard for me to put Amazon in that category that's not going to be there in the top 5 in the next 5 years, because I think Amazon on the retail margins are going to increase. Free cash flow is going to go up the wazoo. AWS is still scaling great. AI is being incorporated into AWS. And then you got advertising, which is just doing great. Now, Twitch is interesting. For some reason, Twitch is not profitable yet. Remember, they paid $1 billion for Twitch, and Twitch CEO over the weekend revealed that he's not, that they're not profitable, which really shocked me, because Twitch is one of those companies where you expect they would have been profitable by now. I mean, it just goes to show how incredible YouTube is, because I don't even know if YouTube's profitable, but Google's definitely subsidizing it. YouTube brings in about $30 billion a year on average, very similar to Netflix in terms of revenue. Google doesn't disclose if YouTube is profitable. I would imagine they're somewhat profitable. I mean, I know there's a lot of costs associated with YouTube, but it has to bring in a decent amount of opportunity for Google. But the fact that Twitch can't get profitable, it speaks to the fact that, what if Amazon sells Twitch? What if they just get rid of Twitch? Or I don't think they would, but they would have to integrate Twitch in some interesting way, because you can't have Amazon have Twitch that's unprofitable for a long time. Twitch should be a money printer for Amazon, just in terms of the live events and stuff like that, and it's not, which is very weird. So if they could unleash it, because now Twitch is not worth $1 billion. They acquired it for $1 billion in 2014. I think Twitch enterprise value minimum $15 billion on Twitch. I mean, Twitch has grown massively since 2014. I absolutely, I think Twitch is in that $15 to $20 billion range. I don't think shareholders would be upset if they sold off Twitch. And I think there would be plenty of people willing to buy Twitch. The question is, who's buying it if it's unprofitable? There has to be a reason why it's, unprofitable. Twitch has a problem with moderating. They shouldn't moderate so much. You know what the problem is with Twitch? There are certain words you can't say on Twitch. Like I think the word virgin is banned on Twitch. You're not allowed to say that word because it's like a slur. I don't know, guys. I don't make this up, but like this is the rules. And then on top of that, so you have all this weird moderating, and then you have girls who are literally like they're one movement away from showing off everything, and they're naked on streams, right? And like Twitch is somehow allowing that. So it's like it's just the hodgepodge of a ton of nonsense in terms of what you can say and what you can't say. But then you've got basically, essentially pseudo porn stars there. It's like, it's just very confusing how the platform is operating right now. And so that's why I think it's hard for it to keep working. Amit takes offense to, I take offense to the word virgin. It's a very offensive word. Okay. Speaking from personal experience with that word. Perplexity is $200 per year. No thanks. And see that comment right there. That's the reason it's hard to beat Google, because Google's free. So as soon as Martin finds out that Perplexity is $200 a year, he's like, I'm not paying that shit. And to be honest, I think the far majority of the world is not paying for a search engine. They're just not. Like, I pay $20 a month for ChatGPT because like I use the crap out of it, but the far majority of the world does not care about search to be that good. They just need to get the answer. And if Google can deliver the answer decently, they're going to stick with Google. So it's going to be hard to dethrone Google, which is why I've invested in Google as well. Where do you see Amazon end of year? I agree with Goldman Sachs. They have a $200 price target. I think end of year, $200, very easy for Amazon to be able to do. They just have to make sure free cash flow margin and retail e-commerce margins go up. If they do that, the market's going to give them the premium. It's just that simple. I mean, remember, the stock was at 105 around, not even this time last year, around the summer. It was at May, it was $105. And then they got interrogated by the FTC. And even with that lawsuit, stock's at 140 or 150 right now. Like, all-time highs is 180. Google all-time highs is 160. I think all the Mag 7 are going to do well by the end of the year. And I think Tesla might outperform all of them, quite frankly. Even Apple will be fine, but we'll see how it ends up by the end of the year. Dave says, all right, I got 1 hour before I got to leave for school. I'm going to try and sleep. Thanks for the stream. Yo, dude, the fact that you can try to sleep for an hour before you can go to school and you can take a 1 hour nap is very commendable, because like, I'm going to California tomorrow morning. We'll probably end it off here. So I'm going to California tomorrow morning, not going to be able to do the live stream for the next 2 days, which is another reason I want to go live today. And I don't think I'm sleeping tonight because I don't trust myself waking up in time for that flight. I just don't. I know how I operate. So the fact that you can take a 1 hour nap and then get ready to go to school, like, I would just stay awake, dude. Like, I don't trust myself taking naps. I just don't. I'd just rather stay awake. Like, it's just hard for me. So yeah, probably not going to be sleeping tonight. I don't sleep. That's true. Okay. Bitcoin, 42,100. Yeah. Bitcoin fell below 42,000 over the weekend, I think, for a little bit. So it got a little scary over the weekend. We'll see how it ends up here, but, I'll be back on Wednesday, guys, with the market close. Yeah. We got to 41,696 on Bitcoin on January 14th. Now we're at 42. So we talked about Bitcoin in the stream. You can go to that chapter once the video is done. But Bitcoin obviously has been in a tough situation now at 42,248. Again, stat of the day: Coinbase was $187 on 1228. Bitcoin was at 42,500. Coinbase is now $129. Bitcoin is still at 42,500. Coinbase fell 31% at the same time. Bitcoin stayed flat after going up to 49,000 and being down. MicroStrategy was $727 at the time. Now MicroStrategy at 478. So the Bitcoin stocks have fallen, even though Bitcoin has stayed flat, even though it went up and down. Okay, so yes, I'm going to be going to California tomorrow. Not going to be sleeping tonight, most likely. Not going to be able to do the market open on Tuesday and Wednesday. We'll be here for the market close on Wednesday. It's going to be a quick 24-hour trip. Go there, get the job done. I cannot say what the job is yet, but I think you guys are going to be very excited once I reveal what I ended up doing in California. And I'll be back on Wednesday for the market close, and then Thursday we'll have the market open as well. Are you still doing FJ while there? Maybe Carlos and I will go live, because Carlos is picking me up because he lives in LA. So maybe, but if not, then we'll be back soon. Will you stream from Cali again? Probably in the night with Carlos, but not gonna be able to do an actual market open just because the flight's early in the morning, and I could have got the flight later, but then it would have messed up the schedule. So I was thinking of, can I buy Wi-Fi on the flight and do the market open? But then I realized, dude, like, the flight Wi-Fi is okay, but it's not the best, so it's gonna be hard. I'll probably be tweeting the market open live, but won't be on YouTube. Okay, that is it for me. Thank you all for being here. You do know we're about to get hit by a storm, right? Well, I hope it's not. Where's the weather? I hope it's not tomorrow. Is it bad tomorrow? Oh, shit. Well, it's about to snow 50%. Ah, shit. It is snowing tomorrow badly. Damn, dude. The flight's at 8:32 and it's snowing at 8 a.m. tomorrow. I hope it doesn't get delayed. I mean, if it gets delayed, I'll be back home because it's going to mess up the entire event. So, I mean, let's see. Let's see what happens. Hopefully there's no delay. Hopefully not. All right. That's it for me. Thank you, everybody, for being here. Hope you guys enjoyed the market open live. Even though there was no market open, the show must go on. Can't ever stop. And so thank you all for being here. Hope you have a great day. Let's kill it. Let's get through this week, third week of January, and let's keep going. Appreciate you guys. I will see you soon. Well, another Palantir Daily episode will be out in a couple hours, but I'll see you guys live on Wednesday. Bye, everybody. Have a good one. Good night.